let's start it off with the big breaking news on Apple. The company announcing a 4-for-1 stock split. Josh Lipton just spoke with CEO Tim Cook moments ago. Josh, what's the latest?
That's right, Melissa. And as for why now with that 4-for-1 stock split, Apple's saying it's to make the stock more accessible to a broader base of investors. If you look to the results, Apple easily beating here on the top and the bottom. iPhone revenue blowing past expectations to $26.4 billion. Street was closer to $22.4 billion. I did have the chance to catch up with Apple CEO Tim Cook. We talked about those iPhone demand trends and the mix in the quarter. Cook telling me iPhone 11 is the most popular iPhone, and we had a great launch, he says, on iPhone SE during the quarter. It was also very strong. We had a very nice uptick on a year-over-year basis in switchers, meaning Android switchers, that we were happy to see, and the iPhone SE is clearly helping with that. I did ask Cook, too, about those broader work-from-home trends. How is that benefiting Apple's products and services during the quarter? Cook says it definitely is. It definitely has boosted, Cook saying, Mac and iPad. We see both of those likely picking up share and in addition being a tool of choice for their productivity. And so we've won several school bids for iPads, and you can definitely see the strength of the Mac numbers. And when you combine those, we have the strongest product lineup in both Mac and iPads that we've ever had. It's the combination of those things coming together at the same time that are producing the results. And we did ask Cook, too, about China. I asked him what are business trends like in China during the quarter. Cook telling us they did grow 2% in real dollars, but on a constant currency basis, they actually grew 6%. So we definitely saw China sort of come back into a big increase from where it was in the quarter before, where the shutdowns took place. And remember, in China, those stores have remained open. It's not like here in the U.S. we saw stores open and then fairly quickly have to reclose due to those COVID-19 spikes. I asked Cook in China, does he think that made a difference? And he says it had, telling us, I think getting the stores open again in China was key. We now have about 75% of our stores open in the world, and we're hoping, as I'm sure everybody is, that the pandemic gets under control, and I'm hoping that we can reopen those here in the U.S. soon. That conference call is kicking off right now. Melissa, back to you.
Do you think we'll hear about the timing of a 5G phone launch?
Well, you know, Tim Cook does not tip his hand to what's coming down the pike in his portfolio, Melissa, like some of his peers. So I think it's going to be hard to get some details. I'm sure analysts are going to look for any kind of color, any kind of commentary about whether that annual iPhone launch is on track, or at least largely on track. I think a lot of investors think, listen, if it was delayed by a month or two, they wouldn't be too worried. They might start getting worried if it meant those phones wouldn't be on the shelves in time for the holidays. Of course, even if they are, the big question is, what is demand going to be like for those phones? Maybe we'll soon find out.
Yep. Josh, thank you. Josh Lipton on Apple. Guy Donnelly, we go to you first. High expectations going into this quarter, and yet we have the stock here higher on the back of this.
Incredible. I mean, Josh went through the numbers. The one that sticks out to me, you know, consumer services, the revenue is now 22% of their overall revenue, and that's trending in the right direction. And, you know, Tim can speak to this. That's why they're getting the multiple they probably deserve. It's interesting, the last week, I think it was the 24th, and look, I was on record saying I thought the stock would trade back down to 325. You'd get another opportunity to buy it at that prior all-time high. But on that day, you know, the stock was trading in the mid-350s. It was down precipitously over a few trading days, and now here we are again. So what do I think going forward? Ridiculous quarter in a good way. The 4-for-1 split, I think this is the 5th split now they've done in their history. My sense is, given it's going to happen at the end of August, you know, the stock probably meanders either side of 400 until then, but there's nothing not to like about this quarter, Melissa.
Tim?
These services numbers, yeah, I mean, they're extraordinary. Not just 22%, they grew 15%. If you think about it, it's almost it's a $56, $57 billion company on its own on an annualized basis. The $198 billion of cash is something that's very important. I think the ability of this company to use their balance sheet and to create value for shareholders is something that continues to be at least underestimated. In terms of the multiple, yeah, I mean, you put it probably at 25 times next 12 months on the services. iPhone at about 16 times, Mac at about 11 times, other products somewhere around 12 times. This, you can rationalize at 22, 23 times forward multiple, which at this point, look, I think the street's going to be rushing to upgrade this one. But back to what Guy said in terms of the price move, what makes this so extraordinary is of the 4 big stocks that reported in the after hours, Apple was truly the one, in my view, that was the most offsides in terms of just how far it had run. From June of 2019 19 to this move in the after hours, you're talking about 160% move. It's just nothing short of extraordinary. So the expectations were high coming in, and these guys beat it. It's a very big afternoon.
Tim was mentioning upgrades on the street, Brian Kelly. Can we upgrade a stock if the company does not give guidance for the rest of the year?
Well, yeah, I think you can. I mean, people will. People are going to start anticipating whether or not that 5G phone is going to come out. They're also going to try to start anticipating whether or not that this, the growth in this quarter, was it a one-time thing where people are at home, they had to buy iPads, they had to buy new Macs, because all of a sudden now their kids are learning online. And is that sustainable? I personally think it is. I think you're seeing a real shift here. So I do think, people are going to come out and start saying there's nothing really wrong with this. So I think people upgrade this. The one thing I would say in general, though, is, this is very clear about across the board with earnings tonight, is that, number one, you never bet against the American consumer, even in the middle of a pandemic. And then number two, a lot of people have said, hey, the stock market is disconnected from the economy. We had a negative 32% GDP print today, and these tech companies just crushed it. So the American consumer is still alive and well.
And the American trader. We've been talking about Robinhood and the popularity of the retail investor. And here Apple goes splitting 4 for 1, Steve Grasso. And theoretically, this is at an opportune time in terms of the attention being paid to the stock market and to stocks specifically by retail traders who are in there for the first time.
Well, but to that point, it's a little bit conspicuous. Why would they do this when you could buy fractional shares with any online broker right now? So I'm a little shocked at that. But to Guy's point, stocks will run into a stock split. That's number one. Think about, though, where the stock came from. It sold off 10% very recently. So they primed the pump going into this print. You had the consumer protection investigation that's coming up. You had antitrust yesterday. So these things were sort of like a balloon or a beach ball being held underwater, and it seems like they all popped. For me, though, I sold my large cap tech because I thought that the market was going to be selling off. Market sells off, all these names drag you down. Tomorrow we're going to be positive, but I still think that sell-off is coming. I would be taking profits right now. I don't want to get back into large cap tech just yet.
And speaking of those new to trading at home, Guy, let's do a little more. You take one stock, it's like a piece of cake.
I love this.
You cut the cake in half and you still eat.
Where's the music?
It's the same. It's the same piece of cake. It's just cut up in different pieces. The same amount of calories, same amount of fat that you're consuming theoretically.
And we shouldn't have to say this, and I'm not trying to speak down to anybody at all, but it's worth mentioning that the stock will be cheaper in terms of price, but it's not a cheaper stock. And I know, listen, I say it because I think we have to. And I understand what Steve just said, and my pushback would be just to take the other side. My sense is maybe one of the reasons they did it, split 4 for 1, is for the exact reason Steve just mentioned. Maybe they're not all that enamored with the thought of fractional shares. I don't know. It's just a thought, but it's one, just to be the other side of that coin.
All right, let's get more on Apple. Bring in Gene Munster of Loop Ventures. Gene, great to have you with us. What stood out to you?
Well, really, let's take a step back. As Apple had everything thrown in with this quarter in terms of what's going to happen with the iPhone, and that powered up 2% year over year. Really surprised me. The overall businesses were expected around the Mac and the iPad, but that really shows, I think, the strength. And this company has just powerful tailwinds coming over the next few years around 5G, wearables, AI, autonomy. And so what really stood out to me is this ability to do as well as they are during the pandemic and this tailwind coming up. And I think that these results really stand above the other tech companies that we're reporting tonight.
Is there anything in this quarter, Gene, that would raise the ire of lawmakers who are looking to, rein in Apple in any way?
Well, the App Store is a central focus. Yesterday, 20% of the questions were directed towards Apple. They did well relative to the other players, but those questions were almost entirely directed at the App Store. And I think there are some questions how Apple navigates that. But if you look at the other companies that were on Capitol Hill yesterday, Apple is by far in the best position. The focus of these regulators is not Apple right now. It is clearly Facebook and Google. And I think that piece, this what I believe is the reality of them having a lower potential impact from regulation in the years ahead, because it will take years.
Right.
I think that is yet another reason to own shares of Apple. And Melissa, I put all of this together and think about what they just did specifically about the iPhone business. And then think about what is coming in the years ahead, the next 2 or 3 years, this cycle and 5G wearables like we talked about. I find it progressively more difficult to defend a multiple below what these other big tech companies are trading at. And I ultimately believe that Apple should not be penalized for its hardware business. I think this quarter is a great testimony to that. And putting it together, I think this stock should be comfortably above $500.